Assalamualaikum. My name is Muhammad AMINUDDIN bin Azmi. My matric number is 290406. Okay. The first company we chose is Takaful Malaysia Berhad. It is the first company Takaful established in Malaysia that has been in operation for more than 30 years. The company has also been on the stock market since 1996. Its headquarters is located in Kuala Lumpur. The largest shareholder are Tabung Haji, Employees Provident Fund, and Retirement Saving Fund. Okay, the next company we chose the Alliance Malaysia Berhad. This insurance company was founded in Germany as early as 1980. The company has been established in Malaysia since 2001. Its headquarters is located in Kuala Lumpur. There are 32 branches nationwide. 2011 was the first year the sustainability report was released. The company was also listed on the stock exchange.
Hi and Assalamualaikum. My name is SITI BINTI and my matrix number is 283043. Today, I would like to present about differences performing within two companies, which is Company Alliance Malaysia Berhad and Takaful Malaysia Keluarga Berhad, using financial ratios method. The main of the financial ratio is to gain information about the company using the numerical value taken from the financial statement. So, how do you use benefit of financial statement? We actually use to performing quantitative analysis. Financial ratios are divided into several categories. First is liquidity ratios. We use to determine either way the company can use its current asset of liquid asset to cover its liability. So, today I will use two ways from the liquidity ratios, which is current ratio and quick ratios. This is the easiest way to get the current ratio. We only need to divide the total current asset into the total current liabilities based on company's statement of financial position. So this is the formula of current ratios. Let's move into the Alliance Malaysia Berhad and Takaful Keluarga Malaysia Berhad. For the Alliance Malaysia Berhad, current ratio is total current asset is 1,291,956 divided into total current liabilities 245,017 equal to 5.27. For Takaful Malaysia Keluarga Berhad, the total of current ratio is total current asset 2,490,024 divided into total current liabilities is 647 and 641 equal to 384. This ratio measures the short-term debt paying ability of the company. So, between the Alliance Malaysia Berhad and Takaful Malaysia Keluarga Berhad, which is the best company? According to the previous figure slide, we noticed that both company current asset and current liabilities. That means more than one, and of course, it is a good sign. It shows that Alliance Malaysia Berhad has the higher current ratio, which is 5.27, and Takaful Malaysia Berhad is 3.84. Quick ratio is definitely different from the current ratio. Quick ratio is more into strict come to determine the liquidity. Quick ratio is like current ratio, but it excludes current assets such as inventories, and it may be difficult to convert into the cash. For the calculation, we know that current ratio divided into quick ratio divided into current liabilities. We take the total current asset minus inventory and divide it into current liabilities. Next, we see the quick ratio of Alliance Malaysia Berhad. For the Alliance Malaysia Berhad, the total current asset is 3,407,915 divided into current liabilities 2,045 and 17 equal to 13.90. For the Takaful Malaysia Keluarga Berhad, the total current asset is 1,152,781 divided into current liabilities is 647 and 641 equal to 1.77. According to the previous slide, they are the huge quick ratio between Airlines Malaysia Berhad and Takaful Malaysia Keluarga Berhad, which is shown that Airlines Malaysia Berhad has 13.90 and Takaful Malaysia Berhad has the lowest 1.77. So for the conclusion, we can say that Airlines Malaysia Berhad unable to cover the company of liabilities.
Hello, my name is BINTI AZMAN. My matric number is 276623. Today, I want to talk about activities ratios for Syarikat Takaful Malaysia Keluarga Berhad. The first one is inventory turnover. Inventory turnover is a measure of how efficiently a company can control its merchandise. So it is important to have a high turn. This shows the company doesn't not overspend by buying too much inventory and was researched by storing non-sellable inventory. It also shows the company can effectively sell the inventory it buys. For this case, cost of goods sold for Syarikat Takaful Malaysia Keluarga Berhad is RM411,423 and the average inventory is RM227,473. After apply this formula, you can simply get the inventory turnover is RM1.81. Number 2, total asset turnover. The asset turnover ratio measures the efficiency of a company's asset in generating revenue or sales. It compares the dollar amount of sale revenue to its total asset as an annualized percentage. Thus, to calculate the asset turnover ratio, divide net sales or revenue by the average total assets. For this case, net sales for Syarikat Takaful Malaysia Keluarga Berhad is RM387,838 and the average total asset is RM40,551,270. After apply this formula, we can simply get the total asset turnover is RM3 cents. Number 3 is account receivable turnover. The account receivable turnover ratio or receivable turnover is used in a business accounting to quantify how well companies are managing the credit that they extend to their customer by evaluating how long it takes to collect the outstanding debt throughout the accounting period. For this case, net sales Takaful Keluarga Malaysia Berhad is RM387,838 and the average trade receivable is RM140,409. After apply this formula, we can simply get the account receivable turnover is RM3.39. Okay. The next one is activity ratios for Syarikat Alliance Malaysia Berhad. The first one is inventory turnover. Inventory turnover is how fast or how many times you can sell through your inventory during a specific time frame. A high turnover rate often means you are selling your goods quickly and efficiently. How long turnover rate can indicate the sales are slow or that you are overstocked. Stock turnover, and inventory turns are other common names for inventory turnover. For this case, cost of goods sold for Syarikat Alliance Malaysia Berhad is RM1,545,704 and the average inventory is RM110,148. After apply this formula, we can simply get the inventory turnover is RM40.03. Number 2, total asset turnover. The asset turnover ratio measures the efficiency of a company's asset in generating revenue or sales. It compares the dollar amount of sales revenue to its total asset as an annualizing percentage. Thus, to calculate the asset turnover ratio, divide net sales or revenue by the average total asset. For this case, net sales for Syarikat Alliance Malaysia Berhad is RM478,497 and the average total asset is RM23,643,487. After apply this formula, we can simply get the total asset turnover is 2 cents. Number 3, account receivable turnover. The account receivable turnover ratio or receivable turnover is used in business accounting to quantify how well companies are managing the credit that they extend to their customers by evaluating how long it takes to collect the outstanding debt throughout the accounting period. For this case, net sales Syarikat Alliance Malaysia Berhad is RM478,497 and the average trade receivable is RM151,396. After apply this formula, we can simply get the account receivable turnover is RM3.60. Okay, Doctor, that's all from me. Thank you.
Assalamualaikum, I'm NORHANA binti ISHAK would like to share about profitability ratio. Profitability ratio are a class of financial metric that are used to assess a business ability to generate earning relative to its revenue, operating cost, balance sheet, asset or shareholder equity over time using data from a specific point in time. Profitability ratio can be compared with efficiency ratio, which consider how well a company use its asset eternally to generate income. Okay, profit ratio or profitability ratio assess a company ability to earn profit from its sales or operation, balance sheet, asset or shareholder equity. Profitability ratio indicate how efficiently a company generate profit and value for shareholder. Higher ratio should result are often more favorable, but this ratio provide much more information when compared to result of similar company. The company on historical performance or in the industry average. Okay, for calculation profit margin on sales income, alright. Net income divided by net sales. We can see at Syarikat Tagaful Malaysia Keluarga Berhad. Okay, 412,200 divided by 4485837 equal to 9.18%. For Alliance Malaysia Berhad, we can see 478,497 divided by 567,1113 equal to 8.53%. So we can see profitability ratio compare income statement, account, and categories to show a company ability to generate profit from its operation. Okay, profitability ratio focus on a company return on investment in inventory and other assets. This ratio basically show how well a company can achieve profit from their operation. Next, return on asset, ROA. What is ROA? The terms return on assets refer to a financial ratio that indicates a company profitability relative to its total asset. Company management analyze and investor can use ROA to determine how efficiently a company is using its asset to generate profit. This metric is usually expressed a percentage using a company's net income and average net worth. A higher ROA means the company is managing its balance sheet more efficiently to generate profit, while a lower ROA indicates rooms for improvement. Okay, for key takeaway, ROA is indicator of a company profitability relative to its total asset. Management analysts and investor can use ROI to determine whether a company effectively using its asset or to generate profit. Okay, calculation a company ROA by dividing net income by total asset. Okay, it is best to compare the ROA of companies in the same industry with the same asset base. Okay, ROA consider a company's debt but not return on equity. Okay, we can see for Syarikat Tagaful Malaysia Keluarga Berhad 412,200 divided by 12705,834 plus 11793,138 divided by 2. Okay, for the answer is equal to 3.36%. We can see for Syarikat Tagaful Malaysia Keluarga Berhad 412,200 divided by 12705,834 plus 11793,138 divided by 2. Okay, for the answer is equal to 3.36%.
Meaning of the leverage ratio. The leverage ratio is a financial ratio that can show the level of debt that has been issued by a business entity or business. The way to calculate the leverage ratio is to compare the entire total debt burden of the company on its asset or equity. That means the leverage ratio will show the total asset of the company owned by the shareholder compared to the asset owned by the lender. Type of the leverage ratio. First, debt to asset ratio. Second, debt to equity ratio. Third, debt to capital ratio. Fourth, debt to EBITDA ratio. First, debt to asset ratio. The calculation is done by dividing all debts by the total asset owned by the company. The formula is debt ratio equal total debt divide total asset. Debt to equity ratio. The way to calculate is by dividing the company total debt obligation by the entire equity. This formula is debt to equity ratio equal total divide total equity. Debt to capital ratio. The calculation of the ratio is done by dividing all total debt by total debt and totally all equity. The formula is debt to capital ratio equal total current debt divide total debt plus total equity. Debt to EBITDA ratio. EBITDA stands for earning before interest, tax, depreciation and amortization, which is the income obtained before subtracting tax, interest, amortization and depreciation, or simply gross profit. The calculation is done by dividing debt by gross profit. The following is the complete formula is debt the gross profit ratio equal total debt divide gross profit.
Assalamualaikum and hi. This is BINTI AZIZ, matrix number 282926. Next, I will explain about the calculation of leverage ratio, which are debt to asset ratio and debt to equity ratio. First, I will start with debt to asset ratio. For Alliance Malaysia Company, we got 0.190 and for group is 0.85825. As you can see, for Syarikat Takaful Malaysia Berhad are 0.856 for company and 0.855 for group. Debt to asset ratio, which is below than 1.0, is relatively safe, whereas 2.0 or higher would be considered risky. Both company has less risk, but Alliance has better management of debt as compared to Syarikat Takaful Malaysia Berhad Group and Company. On the other hand, the debt to equity ratio shows Alliance with 0.234 and 4.705 for company and group respectively. For Syarikat Takaful Malaysia Berhad as 5.961 and 5.898 for company and group respectively. This shows Alliance Berhad has a lower debt to equity, which means the firm is less levered. A high debt to equity ratio can be good because it shows the firm can easily service its debt obligation through cash flow. From this aspect, Syarikat Takaful Malaysia should maintain so that the debt to equity would not get too high in case of the firm may not able to service the debt. That's all from me. Thank you.